Good morning, good afternoon, and good evening to all of you, depending on where you're watching us from. And welcome to the ION Influencers Fireside Chat, where we speak to the sharpest minds from the world of capital markets. I'm your host, Giovanni Amodeo, and today with us, we have Xiaoxi Lin, who is partner at MoFo. And the topic of today is identifying trends in public deals in the US. So thank you for being with us, Xiaoxi.
Thank you for having me.
Great. So let's start with your background first, and then your role within MoFo and what's MoFo.
Sure. Thanks for having us today. Very excited to be talking about this because we do, especially our Asia team. I think it's a specialty that we focus very much on U.S. public transactions. So I grew up in China, went to law school in the States. And I started my career in New York for 5 years before I returned to Asia. And I've been doing this for more than 15 years, focusing on M&A and capital markets. And I've worked with many US public companies. Very excited about the MoFo platform because US public transactions, as I mentioned, has been one of my main focuses throughout my career. And MoFo has one of the strongest platforms in Asia for this type of transaction, this space. So my experience combined with the MoFo platform, we genuinely do now have probably the strongest credentials in this area in U.S. public company M&A and de-SPACs, especially given the changes in the market. So very, very excited to be talking about this.
So we've seen the US public market activity picking up over the last few months compared to the way we were a few years ago. Why now? What's the trigger?
Sure. So I think it's there are many factors that contribute to this. First of all, I would say that we have observed a pickup in market activities, both in terms of take private, in terms of IPOs, in terms of de-SPAC transactions and reverse takeovers. I would also say that we still see a very strong pipeline. The current pickup, as manifested in deal volume, is real, but we think it's modest. We think the market still has a lot of potential that's being, yet to be released. And the reasons are multifold. And it's also a little different within each sector. So taking IPOs and de-SPACs and reverse takeovers now first, there has always been a really, really strong demand for Asian companies to access the U.S. capital markets through various means. A traditional IPO, de-SPAC, and RTOs have all been relatively popular means to do that in past several years. I think everyone has read in the news as we see a pickup in the Hong Kong capital markets and generally in the markets in the Greater China region this year. I think that demand has continued, and it's very natural for there to be a pickup in that market as well. But to be fair, that market has always seen pretty strong demand, even in the past 2 to 3 years when certain markets have been difficult. Now, this year, with the general pickup in sentiment, I think it's just natural that we see a pickup. Like I said, I still see a very large pipeline of companies, considering this route, not yet pulling the trigger. So like I said, even though there has been a moderate pickup, I see a lot of potential in that market for the strong demand. And there are many reasons that they haven't really changed. The U.S. capital markets is the largest and most sophisticated in the world. It has a very, very sophisticated and deep investor base. It has a very sophisticated professional ecosystem to support that capital markets. And also due to the different rules and listing standards and ecosystem in terms of certain industries. So some companies are just naturally more suited to be listed in the United States. For example, companies that are more innovative, that are earlier in their stage of revenue generation, but nonetheless have a very, very strong thesis, business model. These companies and also certain types of tech companies. Those companies naturally more suited for the U.S. capital markets from a rules perspective. So that's the listing perspective. I'll quickly pause here, see if any questions, but I think I can then address the take private market.
So yeah, maybe you talked about the confidence. When you talk to your clients, how does this confidence manifest?
As we all know, it's a relatively complicated macro environment everybody's operating in. So I think it's a pretty nuanced sentiment in the market right now. I think first of all, certain markets, especially cap markets in the Greater China region, has been difficult in the past 2 years. So I think this year people are seeing more positive signs than negative. I think that's an important signal. Also, I think people are seeing more about the fundamentals of this market, that China and Asia in general is still a huge economy. It has a really strong community of founders, of investors. It has this very, very strong ecosystem in many industries. There are just so many good companies that are being developed. And we see that leaders in industries, different industries, they're still, working very hard, and many of them are doing still pretty well. So that's what we see in the market. And I think after, a couple years of adjustment, people are looking past necessarily the short-term difficulties, and the market is being rationalized more. And also, we have seen an inflow of international capital into the local capital markets, both in terms of primarily in the secondaries market, in the IPOs market, but also some in the primary market. So I think all of those are positive signs that the market has turned a corner. I think is the general sentiment. And another, I would say, another feature of the Greater China market is because there are so many hardworking and active investors and founders and investment professionals. The market reacts to new trends very quickly. This is something that you similarly see in the United States. They react to new trends very quickly, and also the market almost it goes in advance of the actual trends. It pre-prices those trends. So I think that's the other thing. So you would almost always see confidence coming back a little ahead of the fundamentals too. So I think all of these are important factors in building that general market sentiment. On the other hand, I mean, I do see continued caution in the market. Like I said, people are predicting the trends, pre-pricing the trends, and we are seeing strong fundamentals. But has the economy necessarily fully turned that corner? I think there is debate amongst the investment professionals, amongst the economists about that. But people do see that trend, so they're cautiously optimistic, is what I would call it. Yeah.
So now let's move on to the take private. So what are the trends there?
Right. So I think the take private market is a bit more nuanced because I think overall, first of all, take privates has always been a very popular type of transaction for many, many reasons. As you know, another focus of MoFo in Asia is private equity. We are probably the only firm that's band one in both Greater China and general Asia Pacific. We have the top Japan team. So private equity is definitely our bread and butter focus here. Many of our private equity clients have also been very focused on take privates in the US. And there are many reasons for that. First of all, public targets are easy to leverage. So that matches the classical LBO model. But also, there is the general perception often that certain companies may be a bit undervalued. The second reason. The third reason is take privates is a great opportunity to realign the shareholder base, to realign the founders' incentives, and to realign the management team with the company's long-term development goals. And it's also an opportunity to take that company out of the public reporting system and the quarter-to-quarter pressure from the investment community for several years, so that the company can undergo some pretty significant changes, such as split ups, such as realignment of market, or some other large strategic transformations. So there are many reasons why these transactions are just extremely popular. Now, so I would say that today, this year, the pickup is more compared to sort of the somewhat compressed volume in the past couple of years due to the uncertainty in the macro environment. In the past couple of years, we have seen a reduced number of take privates in the market um, for a lot of reasons that are well discussed. But I think the market uncertainty, including the geopolitical uncertainty, is very much behind a lot of these muted volume and take privates. And so I see this year's pickup as being more natural as the market sentiment picks up, as we're used to this new uncertain environment, but still try to operate within this new environment. I think that's what a lot of people in the market are trying to do. There are naturally a pickup again in this very popular type of deals. I think the other thing that's going on, which is sort of related to the trends that I mentioned, as people get more used to this new environment, as they process it, new strategies are developed to not only adapt to this new environment, but also to take advantage of some of the things that's happening here. For example, the MoFo team worked on how it says it's one of the largest and most complex take privates, U.S. take privates in Asia. that transaction is very representative. First of all, the business is very oriented in the local market, making it a more readily available target and a more optimal target than some of the other companies, because this company's business is more oriented to the local market, and it has deep connections to the local market. And this company actually attracted multiple bidders, as is publicly disclosed. So it's a very representative transaction, I think, in this new environment, how investors find actually new opportunities. So I think that's the other side of it, is we're seeing new strategies being developed with respect to targets. Because it used to be when the market was what it was in 2021. Of course, we also think about strategies in terms of what to do with the business after it's taken private. But there's a lot of safety margin. You leverage up the company, you invite a few investors into the mix. There's a lot of safety margin, if you will, in the investment thesis. Nowadays, I think investors, market participants, they think longer and harder about the business model, about what they can do to improve it, and a lot of new ideas are being generated. And
maybe let me stop you here for a second.
Yeah.
Maybe let me stop you here for a second. Let's be a little bit more concrete. So in the last few months, thinking about your pipeline, how have you observed who is initiating the transaction, and what is your role within that?
Sure. I think
take private.
So for the take privates, I think the typical initiators, there are two big groups. One is private equity sponsors, our clients, and the other is founders of companies. That's also the classical model of this type of transactions in Asia. And often, some combination of those two groups, they get together, they brainstorm, they consider the possibility of doing that, and sometimes they go ahead, sometimes they wait a little bit. So I think that's the general trend. Yeah.
And you talked about new strategies being developed. In terms of creativity, how can you use your creativity in those transactions?
Sure. I think that's also one of our specialties, because our team is one of the, a small group of teams in Asia who's, really experienced in this type of transactions. In fact, we have a track record of, creating new market precedents. So we're really, one of the prime teams in the market to help clients design new structures. For example, Holysys is the first BVI incorporated company listed in the United States of being taken private and faced with meaningful dissenter risk. So our team spent a lot of time. Some of this is confidential, unfortunately, but our team spent a lot of time in the deal process. Unfortunately, much of this is confidential. But for example, in this new environment, there may be the need to introduce state-owned investors from China and they would have their unique investment restrictions and investment needs, and we will have to design structures to cater for that. Sometimes it is because there's a new mode of cooperation between the founding team and the financial investors, because the financial investors, they typically need a clear route, clear path to exit. But sometimes the founders, they may want to stay behind, they may want to continue to run companies, but sometimes the founder team wants to sort of have an orderly handoff, and for different situations, structures commercially and legally to accommodate that.
And you talked about in a couple of occasions about confidentiality. In the whole process of doing a take private, how do you make sure that confidentiality is always kept along the way?
That's a great question, Giovanni. And there is no one-size-fits-all answer to that. Now, we try to always look ahead, several steps ahead for our clients. And we do recommend and tell clients to involve us earlier, because then we can sort of look out for the different scenarios for them. Because, for example, when the first thing we get involved, we do when we get involved is we map out for our clients the key disclosure requirements in the process. and we recognize the commercial sensitivity regarding many aspects of the transaction. And then what we do for them is we map out the key disclosure requirements and timing for those disclosures, and we make sure that does not conflict with the commercial process. And if there is, we design strategies to sort of time the events correctly. That will be, the primary thing, one of the main things we do in the initial stage of the transaction. Yeah.
And how do you make sure that you don't burn your options when you do a take private and other options are considered along the way? What's your advice there?
Right. Yeah. So it sounds a bit convenient coming from a lawyer, but I think the key advice I have to give in that regard is to please involve the legal team early. It wouldn't necessarily be very costly, but the early stage advice is really important, maintaining and managing the disclosure and not burning your options. One of the examples we give clients is Delaware Section 203, which is not often implicated in Asia, because many Asian companies listed in the US, they're not incorporated in Delaware. But if they are, they really need to involve lawyer from the very, very beginning, because just talking, and without going into specifics of the rule, just talking can implicate that rule and block the company out from being acquired for 3 years. So that's one prime example I'll always give clients. But there are other examples. For example, if you're talking to international private equity sponsors, I think it's also important to involve the lawyer earlier, because those international sponsors, they also have very, very sophisticated and strict compliance departments. Yeah.
So we talked at length about the take private. We touched upon the public deal situation in the US. So let's talk about SPAC and de-SPACs. So what are the trends and the opportunities there?
Yeah, I think it's relatively well reported that there has been a pickup in SPAC and de-SPAC activities this year in both the US and in Asia. And we're helping multiple sponsors doing their new SPAC IPOs, and we're helping multiple companies in their business combination with SPACs. Like I mentioned, the macro, first of all, there has always been a really strong demand for Asian companies to access the US cap markets. And then there has also been a moderate pickup, I think, in the market sentiment this year. I think on top of that, SPAC is really a less understood tool that really has a lot of unique advantages and disadvantages, pros and cons, that needs to be carefully analyzed. And some companies can really take advantage of this model. So we actually have a chart, a very, very long chart that summarizes all the pros and cons for our clients. This is one of our specialties. But I guess just to flag some of the key points, the first of all, the SPAC process, de-SPAC process is a front-ended process. The parties enter into a binding agreement first, and then they go through the regulatory approval process with the SEC and with other regulators. So it offers a lot of deal certainty. It offers valuation certainty from the get-go. And it also offers a long period, by the nature of this front-loaded nature of the process. It offers a long period where the transaction is already public. And there will be continued public disclosure about the company's business. So it offers a long period to market the company both to investors and to business partners. So I think that's one of the key advantages of that. The other key advantage, which is often talked about these days, is for a company going through a de-SPAC transaction, the financing options are very, very flexible. They can raise in terms of amount and in terms of which investors, what kind of investors they need to raise that financing on. They have much more flexibility as compared to a traditional IPO. And as such, they not only have much more deal certainty, less prone to market risks, but also just have more flexibility, especially in this environment. I think that's important. Yeah.
What about crypto? Is there now a resurgence of transaction in crypto for SPAC and de-SPAC?
Well, if the answer is yes or no, it has to be yes, although I always hesitate a little to talk about the crypto market as a whole, because as you know, it's a very large and complex market, and there are different sectors within it, and there are many, many different strategies within it. Now, the most recent trend is, as you pointed out, is there has been a lot of crypto treasury plays, in terms of de-SPACs and RTOs, or even just pure pipe investments. Meaning a public U.S. company accepts an investment in terms of cryptocurrency or related assets. And in connection with that, there may be a change of control. Maybe the party who is injecting the asset is receiving a controlling stake of the company, maybe not. But it has been a very popular play in the market and very profitable for many of the investors. I have to say that's a very that's a very important trend recently, very popular, but it's just one sector of the crypto market, especially with the new administration in the U.S. Who has demonstrated significant support for the crypto industry. I think there are a lot of different plays are being developed. Yeah.
And a couple of final questions as we are approaching the end of the discussion. One is on your team. What kind of skills are you looking for in your team members?
That's a great question. I'm sure a lot of partners have answered that. I think the first skill we look at, we are a pretty demanding firm. We look for absolutely the best people in the market. If I have to pick a couple traits that are the most important, I think the first would be enthusiasm in what we do, because it's both a very, very exciting area, but it also requires a lot of hard work, and it also requires a lot of careful work. So people who are really enthusiastic and interested in what we do tend to do well. So that's the first thing. I think secondly, we're looking for comprehensive thinkers, because some lawyers, they just focus on the rules that's in front of them. The client's asking a question, they provide that answer. We position ourselves quite differently to all of our clients, as we are truly your trusted advisor. We don't just give you the legal answer and ask you to figure out what you should do. As you can tell from this talk, we try to think comprehensively from our client's perspective, both from a legal perspective and from a commercial perspective. Also realizing we don't know all the commercial factors, but we try to look out for them. What are your options, and what seems to be the best option? What are the pros and cons? So that's one of the key things we do. The other key thing we do, as I mentioned, is we look out several steps ahead for the transaction, and we try to plan out things for them, flag the key risks, plan several steps ahead, and that's also very, very important. So that's what we look for in people, not just people who stay in their narrow lane and just answer the question and offload the responsibility. We look for people who take ownership in that. And the third trait is, of course, communication. People talk about it, but I think it is critically important, especially given the first two things I talked about and the way we do our practice. Is we do try to be our client's advisor, and communication is extremely important with our client, with the counterparty. Yeah.
And imagine your work in a year's time, in percentage. What are you going to be doing more of? More take private, more SPAC to de-SPAC, or something else, based on your pipeline?
Right. Yeah. No, thank you, but that's a really tough question because it's especially in the current environment, it's very hard to predict the future. If I have to guess, I would say I would see relatively proportional growth in each of these areas, because that's typically what we see in the past when the market grows up or becomes more active. Is that does create more opportunities in each of these markets. Like I said, of course, more companies would be considering accessing the U.S. cap markets, but at the same time, God willing, if the environment continues to improve, we're probably going to see more take privates as well, because people are going to see financing will be more readily available, and hopefully there'll be more commercial opportunities to improve the business. So I think it'd be a relatively proportional growth in each of these sectors.
And final question: what macro factor worries you the most right now?
I think worry may not be necessarily the right word. If you asked me this question 1 or 2 years ago, I think what's hanging over everybody's mind for the longest time has been geopolitical uncertainty. That would be the natural answer to your question. But what we have seen in the market, which I think is really, really important, is that market participants, especially in Asia, they're very creative, very smart, and very hardworking, and they can identify new opportunities in the new environment. And same with the U.S. market too. I think the U.S. market is going through that a bit because the new administration hasn't been in place for a long time. But we're already seeing, the U.S. investor market is much larger and much more sophisticated, and they're doing the same thing. So I would say at this point in time, you ask me, I would almost say that worry is not the right word to describe that. Now, is that still probably the biggest factor that affects the market? Yes, I would say so. But it's not just in one way, in a negative way. I think people are now matured enough, and they will probably identify new opportunities in the new environment. So yeah, we'll watch that closely.
Great. Xiaoxi, thank you so much for your insights, and thanks everyone for listening.
Thank you so much for having us.